Why is tiny Singapore quietly pulling ahead of its neighbours? And what does that mean for the rest of Southeast Asia? Singapore often feels small on a map, but enormous in global impact. In 2025, the city-state is once again proving that size isn't destiny when it comes to economic influence. While many countries in Southeast Asia wrestle with uneven growth, trade frictions and political uncertainty, Singapore has been quietly stacking advantages: a stable policy mix, laser-focused investment in high-value industries, an open financial system, and an ability to pivot fast when global demand shifts. That's not hype. Official estimates from the Ministry of Trade and Industry show an unexpectedly strong first half of the year, prompting an upward revision to the government's full-year outlook. The IMF and major banks are watching closely because Singapore's mix of resilient manufacturing, booming financial services, and targeted inward investment makes it a magnet for capital and skilled talent that neighbouring economies are still chasing. In this video, we'll unpack 10 clear reasons, from governance and trade links to microchips, AI, green growth and the services ecosystem, that explain why Singapore is quietly outperforming its neighbours in 2025. Whether you're an investor, traveller, policymaker, or just curious, these are the forces reshaping the regional map. Stay with us, and don't forget to subscribe to infoSphere for smart, concise explainers every week. A nimble, credible macroeconomic policy framework. Singapore's economic advantage starts with policy credibility. The Monetary Authority of Singapore, MAS, and the Ministry of Trade and Industry have earned global trust by being predictable and pragmatic. Inflation targeting in practice through the exchange rate policy, prudent fiscal buffers, and an approach that tolerates structural reform while protecting social stability. That credibility lowers risk premia and keeps the Singapore dollar attractive to international investors and corporations that need a reliable regional base. When global shocks arrive, trade tensions, higher rates, or supply chain disruptions, Singapore's ability to adapt its monetary and fiscal stance quickly without startling markets helps the city-state avoid boom-bust cycles that slow competitors. This policy steadiness is central to why capital and high-skill workers keep choosing Singapore as their regional hub. Targeted attraction of high-value foreign direct investment. Singapore isn't just open, it's surgical about the kinds of foreign direct investment it recruits. In 2025, the city-state continued to secure headline investments in advanced manufacturing, semiconductors, pharmaceutical, and AI-related facilities, jobs and supply chain links that pay above the median wage and transfer know-how. Those investments translate into higher productivity per worker and quicker spillovers into local services, legal, logistics, financial intermediation. Unlike larger neighbours that compete on cost and scale, Singapore competes on a premium value proposition, guaranteed IP protection, world-class logistics, and fast regulatory approvals for strategic projects. This positioning is why fixed asset and strategic investment announcements in Singapore often create outsized economic momentum compared with peers. A concentrated push into technology and AI that multiplies gains. Singapore has doubled down on the technologies reshaping the global economy: artificial intelligence, cloud computing, precision manufacturing, and fintech. The government's ecosystem support, from grants to testbeds and regulatory sandboxes, reduces early-stage friction for startups and foreign R&D centers. As global demand for AI services and semiconductors surged in recent years, Singapore's early investments in talent pipelines, university-industry collaboration, and data infrastructure paid off faster than many neighbours who are still building capacity. That multiplier effect, higher tech intensity leading to better productivity growth across other sectors, is a major reason Singapore's headline performance looks disproportionately strong relative to its size. Global financial hub status that channels capital and talent. Singapore remains one of the most important financial centres in Asia. With trillions of dollars under custody or management in its banks, pension funds and asset managers, the city-state offers unmatched depth in wealth management, corporate treasury services, and green finance solutions. This financial depth lowers the cost of capital for regional projects routed through Singapore and attracts senior talent who in turn build local knowledge networks. When investors want exposure to Southeast Asia with strong governance, they often route deals via Singapore, creating a feedback loop that lifts both service exports and domestic employment in high-value professional services. Recent policy moves and market development programs are explicitly designed to widen that advantage. Trade, logistics, and the micro-state advantage in connectivity. Singapore's geography, a deep natural harbour, world-class airport, and efficient customs matters far more than its square-mile count suggests. It functions as the region's logistics and re-export hub. Goods, data, and people move through Singapore to the rest of Asia and beyond with minimal friction. That efficiency is a multiplier. Multinational firms reduce inventories, shorten lead times, and scale services faster when Singapore is part of their network. During periods of global supply chain reconfiguration, companies prize the flexibility that Singapore's port, aviation links, and logistics providers deliver, which in turn shows up as stronger trade and services receipts than many neighbours. Education, immigration policy, and a concentrated skilled workforce. Singapore's universities, technical institutes, and targeted immigration policies create a tight pipeline of skilled workers. The state invests heavily in reskilling and lifelong learning while maintaining selective immigration that balances local labour market concerns with the need for foreign expertise. The result is a compact, high-skilled workforce that firms can hire quickly, lowering hiring friction compared with countries where credential mismatches or slower upskilling reduce the pace of adoption for advanced tools and processes. This compact talent density helps Singapore scale new industries more quickly. Pro-business regulation plus strong IP and legal protections. Investors care about the rule of law and enforceable contracts. Singapore's legal framework for IP, arbitration and corporate governance is among the region's strongest. That clarity and speed of dispute resolution reduce the transaction costs of doing high-value business there for R&D centres, regional headquarters and finance structures. When you pair that with transparent taxation and targeted incentives for strategic sectors, the balance tilts strongly towards Singapore for firms that value certainty over short-term savings. A growing focus on green and climate technology as a new export engine. Climate tech is no longer just a corporate buzzword for Singapore, it's becoming an export sector. From green finance and carbon market infrastructure to urban sustainability solutions, water tech, waste management, energy efficiency, Singapore is packaging public-private pilots into exportable platforms. Cities worldwide want the Singapore model for dense urban sustainability. Selling those systems generates high-margin services and project revenue that neighbouring economies cannot yet match at scale. This transition to climate-smart, service-heavy exports adds a durable new layer to economic growth. A hub for regional corporate HQs and digital services. Multinationals consolidate their Asia-Pacific HQs in Singapore for governance, tax and talent reasons. That concentration creates demand for premium office space, consulting, legal and lifestyle services, all high value and high margin. The digital economy, cloud services, regional e-commerce platforms, fintech apps, often uses Singapore as its nexus for regulatory engagement and partnerships. Those headquarters and platform functions sustain domestic demand even when commodity exporters in the region face cyclical downturns. Quick adaptation to global shocks and an ability to monetize stability. Finally, Singapore's small size is an advantage for rapid policy iteration. Governments and agencies can pilot reforms, scale successful programs, and remove bottlenecks faster than in larger states with more complex politics. In 2025, when global trade tensions and shifting demand hit the region, Singapore reacted with targeted support for strategic sectors, market development programs for its equity markets, and diplomatic economic outreach that secured critical deals. That agility, coupled with the trust of global investors, allows Singapore to monetize its stability in ways neighbours cannot replicate overnight. Singapore's outperformance in 2025 isn't magic. It's a dense bundle of policy credibility, strategic investment attraction, and ecosystem depth that multiplies returns. For investors and companies, the lesson is clear. In a world of rising uncertainty, tried and tested institutional reliability, plus a willingness to invest in future industries pays off. For Neighbours, Singapore's success is both a challenge and an opportunity. There are obvious areas for regional cooperation and technology transfer that could lift the whole bloc. If you found this helpful, smash the like button, subscribe to infoSphere for weekly deep dives, and tell us in the comments which of these 10 reasons surprised you most. See you in the next video.